Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday. It's November the 5th, 2012. I'm looking at the U.S. markets today, and what we've been seeing a little bit of a bounce today, but I want to kind of draw some points out for you guys. You can see that we're clearly in a downtrend right here. Note the high points, low points. We're clearly trending down here. No question in the direction there, and that's a very important piece of the puzzle, which direction you're moving in, that you want to trade with that trend rather than against it. Whenever you're looking at this particular chart, you know that whenever we're starting to reverse in the other direction, I like to find a hammer candlestick formation, which we kind of had today on the Dow Jones Industrial Averages and a couple of the U.S. markets. But by the close, we'd sold off some of that, give us a little wick out of the top here. Not a good strong signal. The main thing for those of you guys that are looking at this saying, okay, well, this is in a downtrend here and I'm looking for a bottom, maybe this pullback here would be a reversal point for you to buy and look for a new series of higher highs. I would warn against that. Basically, if you look at this previous low point of 130.39, you can see that over here today's low took that out, so you're still slipping to the downside here. So again, I'm not a fan of buying these markets in any way, shape, or form. You could have a bounce here and there depending on who wins the election or who doesn't. I couldn't tell you one way or the other. The main thing for me is this red line here, the 50-period moving average on all the charts. Any bounce that we got, that's where I'd be looking to get short at. I don't think we have a strong market here, not with the earnings that we've been seeing and the forecast for the future. So I'd be looking for to find resistance in the strong downtrend. We could continue to move sideways and bounce around here and there, so buckle up or stay out of it. But right now, I don't see a strong market to be attempting to buy right here. Quick glance here at the NASDAQ. This one we are not currently short. We're watching it, but we haven't really had a nice re-entry on a short opportunity. Last time we went short was at the 50-period moving average, and we've been stopped out and we advanced our stop to this point here. Now, if we were to get a bounce on this, I'd be interested in shorting at the 50-period moving average again. I'll be looking for that opportunity if I get it. Any move that we were to see to the upside here, as I mentioned last weekend, you have been finding support at the 200-period moving average. The market could, on some news or election results, something, get some kind of a bounce to the upside, but again, I would expect the 50-period moving average to basically be the line in the sand where they can't push any higher. That would continue to be a downtrend. You'd have this high point here, lower high, lower high, lower high here. And again, the reason why I would also see that as being a short-lived rally is because if you look at the ultimate oscillator, she's already at 50. The upside potential here not very high before you get into the overbought condition above the 70 line, the ultimate oscillator. So again, not interested in trying to buy something here, calling a bottom and reversal thing and something like that. I'm looking to go short. The last chart we're going to look at today will be the VIX, or the Volatility Index, which runs the inverse or the opposite of the S&P 500. As we talked about before, whenever you're looking at the VIX, if you see a bullish uptrend in the VIX, you should be seeing a bearish downtrend in the S&P 500, which we see, and again, that would make perfect sense. It's confirming the direction, so forth and so on. We talked about this on this day, I believe it was. We said look for a bounce opportunity and a buy opportunity at the 50-period moving average or below that. You had the opportunity the next to open the following day, and then we told you at the same time to be looking for a gap fill. You had this close up here and then an open down here. This gap would be filled about the 1850 level. That happened today. This trade is over. You should have been out of the trade once that had happened. Everything that you could see on that chart had been brought to fruition. So now we see that we have a gap from Friday's close to today's low. That can fade as well, so be watching for that. However, downside potential here, I don't see a lot of it. I think you pull back a little bit, you get closer to the 50-period moving average, you're going to have buyers step in again because you are in an overall uptrend. So that's what you're going to do when you're in an uptrend. You buy the pullbacks, and best opportunities will be in the 50-period moving average. You also want to point out, I've drawn the blue line here on this chart showing that this is a strong support line that we have bounced off of several times, and be looking for that to come and play again. It's going to be roughly the middle Bollinger Band line whenever you get there, about the 16 area. Keep an eye on these charts. They're always kept on our free website at PerfectStockAlert.com. There's 19 of my personal charts there with my personal annotations, and are updated every single day with my advanced stop loss limits and so forth and so on. God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.